Welcome to Investors Insights. Our topic today is market fireworks. We hope you had a great 4th of July. And as we start the week here in the completion halfway through of 2021, we want to bring you some information that we think is of tremendous value in relation to your portfolio and also your financial blueprint. We appreciate you watching us on this vlog, and also know that the discussions we're having here today will continue throughout the week on our social media, on Facebook, Twitter, LinkedIn, and we will also continue to send out emails as well as be available always for in-person meetings, Zoom meetings, WebEx meetings, however we can best communicate with you. Now, I am joined by my distinguished colleagues, Adam Van Zant, Trey Booth, and Bobby Norman. Gentlemen, great meeting this morning. I really like the fact we chose market fireworks as our topic, and I think our viewers are going to understand why. Some things aren't what they seem to be. And so with that, Bobby, why don't you start us off and just let people understand what's going on in the market in relation to the S&P 500.
Yeah, Greg. So if you've seen the headline news in the market recently, you might have seen that the S&P 500 index hit a new record high last week. But as we analyze the market, we've noticed that under the surface, fewer stocks have been participating. So just 15% of the stocks in the index hit a new 1-month high, along with a benchmark on June 24. So, and for the first time since December of 1999, a record closing high occurred with less than half of the stocks in the index above their 50-day moving averages. So, for the last few years have taught us it should be that the largest technology stocks are capable of powering the S&P 500 to new highs. However, a far healthier and more sustainable trend typically sees stronger participation, like we saw at the beginning of the year, when 30, 40% of the index are hitting highs. Now, just 15% of the stocks in the index are hitting highs. So no guarantees, but the good news is that we're heading into July, which has historically been one of the better months for the market.
Yeah, and I think it's a great point that you're making, because people will see the news, S&P 500 hits a new high, but what does that really mean? And so you drilling down like that on the details is really important. And Trey, you interjected as well from the standpoint of, and I think you've even got a chart to show us here, as to how all the stocks are performing. So talk about that.
Yeah, absolutely. Yeah, Bobby's point is 100% correct. But it's a very recent trend. The market rally that we saw at the end of 2020 and to come into 2021 was a very broad-based rally. This narrowing of focus on larger and larger companies is very recent. You can see on this chart here that if you just look at the month of June, what stocks have done well in June versus what stocks have done well this year, it was a complete flip-flop. The companies that have been doing best for the first 6 months of the year did the worst in June. And the stocks that did the worst in the first 6 months of the year did the best in June. That's a very small sample size, but that could be an indication that the market is topping and the rally is getting narrower and narrower. Or it could be an indication of the pause that refreshes. Things don't always go up. And so you've got to have a give and take of certain companies rallying to push the market higher, and then they've got to take a breather, and then something else continues to market. Right. And so if you just had one narrow section of the market rallying, that's concerning. We absolutely saw that in the last few years with very few large companies making up almost all the gains. For the first time in years, the beginning of this year, we saw a very broad-based rally. Our indicators are that seems to be shifting. For example, on the last trading day of the year, the market was up nearly 1%. Or the tech part of the market was up nearly 1%. But there were 2.5 times as many stocks down on the day as there were stocks up. That's a very narrow rally on that one day. And so these large companies can push the total market. What we need to see is this, if it's the pause that refreshes, then we should start seeing this flip in July. As Bobby said, July is traditionally a very strong month. And so if we see the rally broadening back out, for example, right now, less than half of the subsectors of the S&P 500 are above their 50-day moving average. That's a very short-term trend, trend indicator that Adam tracks for us. And if we see that flip, that'll flip quickly, and that'll be a good indication of a broadening out. So a lot of data to look at. We could see fireworks. It could be an explosion to the upside, or this could be, there's two different ways to take the fireworks show. But so it'll be interesting to see how this turns out. We're going to have to start watching, see if June is the beginning of a trend and July supports that, or if June was the anomaly. And we won't know that until data comes out.
Yeah, and that's well said. And we're going to be tracking all of this. And we do on an ongoing basis here at Five Plan Partners. So, and Adam, Trey's already mentioned your name, but in terms of the support levels, resistance levels, the averages that we're watching here, talk about that.
Yeah, Greg, so I appreciate it. Typically, we give a short-term resistance and support level to the S&P 500 on a weekly basis.
Yeah,
we found this to be a good opportunity since it is mid-year to give a intermediate term. So that's more over a monthly basis. So the resistance level for the S&P 500 that we're looking at is 4,400. The support level we're looking at, keeping an eye on, is 4,200. This kind of coincides. We talked about a base and a support level for the ongoing months. And we are currently looking at a 50-day moving average of 4,200 in the S&P 500. We heard Bobby kind of mention moving day averages with certain sectors, such as the technology sector. And also, you can catch my vlog from last week, our educational vlog that talks about moving day averages and how they coincide with certain resistance levels, support levels, and technical analysis.
That's great, Adam. And you're right. That was an outstanding vlog you did last week. We were getting a lot of clients asking questions about technical analysis and how to look at the ranges and those kind of things. And I think it also ties into what Bobby and Trey were saying about that just because the indice is going up doesn't necessarily mean from the standpoint that all the stocks in that index is moving up with it. We hope that you continue celebrating independence in this great country of ours. So many blessings and things to be thankful for. And we will keep you updated as we continue to move forward. Cannot believe we're halfway through the 2021 year, but we're seeing a lot of positive things in this market. And those things that concern us, like not all the stocks moving up and the full support, we'll keep a close eye on. Have a great week. Keep the celebration going. Thanks.